Welcome to the Nifty Noon podcast. Today, we're going to dive into a bunch of recent updates, really trying to give you the essential insights from, well, late April through the very beginning of May 2025.
Yeah, think of it as your shortcut, maybe. We've kind of waded through all the noise in crypto, NFTs, blockchain stuff.
Exactly. We're going to unpack some significant moves, interesting projects, and maybe some developments that make you think a bit. Our mission today is just to connect the dots for you, the curious learner.
Sounds good. Where should we start?
Let's kick off with a really big one, the launch of 21 Capital. This is a Bitcoin native company, and they're going public with a, well, massive Bitcoin treasury.
Massive is right.
Yeah.
It's really interesting. They're not just dabbling. We're talking over 42,000 BTC.
Wow.
Okay. Yeah, that puts them, I think, as the third largest corporate holder globally now.
Oh, boy.
And the way they're going public through a SPAC merger with Cantor Equity Partners.
Led by Jack Mallers, right, from Strike.
That's the one. It just screams long-term conviction in Bitcoin, doesn't it?
It really does. So, okay, a public company with that much Bitcoin is news itself. But you mentioned they're looking at things differently, like their metrics.
Exactly. That's maybe the most fascinating part. They're not treating Bitcoin like just some asset sitting on the sidelines. They're actually building metrics around it.
Like what?
Well, things like Bitcoin per share, or BPS, and Bitcoin return rate, BRR. It's a fundamental shift, you know? They're measuring success by Bitcoin accumulation and performance, not just dollars and cents.
So prioritizing Bitcoin itself, that really changes the game, potentially.
Makes you wonder if others might follow, right? And what that means for how investors start valuing companies holding crypto.
And who's backing this? Because a move this big usually needs some serious capital.
Oh, definitely. They've got Tether and SoftBank involved as key backers, pulled in about $585 million through PIPE and convertible notes.
Okay, so serious players.
Yeah, and that money is earmarked specifically for buying more Bitcoin and building out this Bitcoin-first corporate structure. Even their planned stock ticker, 6EVN, ties right into the name 21.
Very deliberate. Okay, let's shift gears a bit from established Bitcoin plays to the wilder side meme coins on Solana. There's something called Boop.fun making noise.
Yeah, Boop.fun. It's an initiative from Dingling, a known name in the space. And it's trying to bring maybe a bit more structure or better incentives to that whole Solana meme coin scene.
Which, let's be honest, can be pretty chaotic. So how does it work? What's the core idea?
Well, it revolves around their own token, BioOP. That's the reward mechanism for their launchpad. The idea is to create a more sustainable model, maybe move away from just the pump and dump cycles we see so often.
Okay, so how does this staking-powered reward thing actually help, the creators launching coins and the people trading them?
It's pretty clever, actually. It incentivizes both sides. Creators can launch these cult tokens, as they call them, with no upfront cost. Then, if a token gets traction, hits a market cap around 400 SOL, it graduates, moves to a proper Radium liquidity pool.
Okay, graduation. And then
That graduation triggers daily BOP distributions. 10% goes to the creator, but a hefty 90% goes to the people actually holding that graduated token.
Oh, interesting. So it directly rewards the community supporting the coin.
Exactly. And there's more. If you stake the main BOP token itself, you get airdrops like 5% of the total supply of every token that graduates.
Oh, wow.
Plus, you earn a big chunk, 60% of all the SOL trading fees generated by any token launched on their platform.
So it creates this feedback loop, kind of. More activity, more rewards for stakers.
Potentially, yeah. It encourages longer-term holding and participation. There is a minimum stake, though, 10,000 BOPP, so it requires some level of commitment.
Gotcha. Okay, moving away from Solana meme coins now. Let's talk Bitcoin again, but from the institutional angle. Those Bitcoin ETFs, the inflows seem to be picking up steam again, right?
Yeah, definitely. The data is pretty clear. Since late April, we've seen over, $3 billion net flow into the U.S. spot Bitcoin ETFs.
$3 billion. That's significant.
It is. And BlackRock's IBT had, I think, its second biggest inflow day ever during that period. So, yeah, institutional appetite seems to be back, and it's definitely helped push Bitcoin's price up recently.
And these ETFs are holding a noticeable chunk of the total Bitcoin supply now, aren't they?
They really are. It's close to 6% of the entire circulating supply is now sitting in these ETFs.
Wow.
Historically, big inflows like this have sometimes come before price peaks. But analysts, like the folks at QCP Capital, are still kind of cautious.
Cautious how?
Well, they're saying, yeah, momentum looks bullish, but hitting that, say, $100,000 mark might need another big catalyst. It could be a significant resistance point.
So strong interest, but maybe not a guaranteed straight shot back to all-time highs just yet.
That's the takeaway, I think.
Yeah.
ETF flows are a huge factor, definitely providing lift, but you've also got profit-taking overall market mood.
Mhm.
Lots of moving parts. It's complex.
And are we seeing similar interest in Ethereum ETFs too?
We are seeing increasing inflows there as well, yeah. It suggests maybe a broader institutional look at digital assets, not just Bitcoin.
Right. Okay, let's switch tracks to something, well, pretty novel. This idea of content coins emerging on Zora and Base, turning content into tokens.
Yeah, it's fascinating, isn't it? Basically financializing individual bits of digital content. Could be a phrase, an image, a short post,
What?
anything.
How does that even work?
Well, through this collaboration between Coinbase's Base Layer 2 and Zora, creators can basically instantly mint content into fungible tokens. So every post could, in theory, become its own little tradable cryptocurrency.
So my tweet could become a token people buy and sell. That's wild. What's the point?
The core idea is empowering creators, right?
Yeah.
Letting them directly monetize the attention and distribution their content gets. Traders can then speculate on that content's popularity or sentiment, driving the price.
A direct link between attention and market value?
Pretty much.
I can see the appeal for creators, definitely. But it also sounds, I don't know, a bit like applying meme coin dynamics to everything. Potentially chaotic.
That's exactly the debate. Critics are definitely drawing those parallels, worrying about confusion, reputational risk, financializing things without clear context.
Yeah.
But on the other hand, the volume. Some reports say tens of thousands of these content coins are being launched daily. So there's clearly interest from creators looking for new ways to get value from their work.
So a big experiment unfolding.
Absolutely. Pushing the boundaries of what you can do on chain, even if it's controversial right now.
Speaking of pushing boundaries, Pokémon. There was some buzz recently about them maybe dipping a toe into Web3, possibly linked to the Sui blockchain.
Yeah, that definitely got people talking in both the gaming and crypto worlds. It all stemmed from a seemingly small update to the Pokémon Home privacy policy.
What did it say?
It mentioned a new partnership with a company called Parasol Technologies. And Parasol is a blockchain gaming studio closely linked to Miston Labs.
The team behind Sui. Okay, I see the connection.
Exactly. So that connection, plus some new tradable digital metals appearing in the Pokémon Home app, and then this blog post that seemed to hint at blockchain, but got quickly edited. It all fueled speculation.
But nothing official about Pokémon NFTs or anything concrete.
No, nothing concrete at all, just these hints. But it fits a pattern, maybe. Big gaming companies cautiously exploring Web3 possibilities. The Sui link got extra attention, too, because Grayscale just launched a SUI trust, making it easier for institutions to get exposure.
So maybe they're testing the waters very carefully, embedding tech behind the scenes first.
That seems plausible. Start with digital collectibles, maybe these metals, see how it goes. Avoids alienating the core fan base that might be skeptical of blockchain gaming outright.
Right.
But if those metals eventually did become, say, verifiable NFTs down the line, that could be a huge step for digital ownership in mainstream gaming.
Definitely want to watch. Okay, let's pivot to Ethereum. Some leadership changes at the foundation and continued focus on network upgrades.
Yeah, the Ethereum Foundation has restructured its leadership a bit. They've appointed Xiaowei Wang and Thomas Statchak as co-executive directors.
Two executive directors? What's the thinking there?
The idea seems to be better strategic execution governance, separating the day-to-day management from the board's oversight role, make things run more smoothly, essentially.
And the board still has the key figures, Vitalik Miyaguchi.
Yeah, they're still on the board, along with Patrick Storchenegger and now Xiaowei Wang. So the core principles, decentralization, privacy, security, open source, they're still central. The new directors will focus on scaling, L2 interoperability, that kind of thing.
Guided by that purposeful subtraction philosophy they talk about.
Exactly. And technologically, the big thing on the horizon is the Fusaka hard fork.
Right. Expected late 2025.
Right.
And the controversial part is the EVM object format, or EOF.
That's the one. EOF is a pretty significant change to how smart contracts work under the hood on Ethereum. The goal is cleaner, more efficient code.
But it's sparked debate. Why? What are the concerns?
Well, critics worry it adds complexity. Could that open up new security holes? Could it fragment the developer tools ecosystem? Making it harder for devs who need to adapt.
Okay, so potential growing pains.
Right. But the supporters say, look, this is crucial for long-term scaling and improving the developer experience. It enables more advanced stuff later. It's that classic balancing act, isn't it? Innovation versus stability and accessibility.
Always a trade-off. So while we're talking big picture, let's circle back to Bitcoin and that narrative. Digital gold. Seems like recent market stuff is kind of supporting that idea again.
It does feel that way, yeah. Bitcoin's run up past 94K after Easter, that whole 20% rally in April. Some are saying it showed signs of decoupling from traditional stocks.
Decoupling, that's always the holy grail, isn't it?
Kinda, yeah. And you add in more institutional adoption. MicroStrategy keeps buying. Japan's MetaPlanet adding Bitcoin to reserves, plus the ETF inflows we talked about. It all bolsters that digital gold story.
So uncertainty in traditional markets helps Bitcoin's case here.
Seems like it. A weaker U.S. dollar, geopolitical tensions. It just revives Bitcoin's appeal as a store of value, maybe. When confidence in regular monetary policy is shaky, people start looking at it more like a safe haven.
Interesting. Okay, a couple more things before we wrap. In the NFT space, Nike's Clone X collection. Their images disappeared temporarily. What happened there?
Yeah, that caused a bit of a stir.
Hmm.
CloneX owners suddenly saw generic placeholders instead of their NFT images, and it immediately sparked that whole debate again. On-chain versus off-chain storage for NFT metadata.
Because the actual JPEGs weren't on the blockchain itself, right? They were stored somewhere else.
Exactly. The metadata, which just points to the image file, was hosted off-chain, on Cloudflare in this case. Cloudflare had some issue, the links broke, images vanished.
Highlighting the risk of centralized points of failure.
Precisely. Unlike, say, CryptoPunks or Ordinals, where the art is actually on the blockchain permanently, this was a reminder that NFT doesn't always mean fully decentralized in every aspect.
Was it fixed quickly?
Yeah, thankfully. Samuel Cardillo from RTFKT, the studio behind CloneX, clarified they were actually migrating infrastructure to Arweave for optimization. He got the images back up and said they're committed to moving the art fully decentralized using things like Rdrive and Arweave.
So a good, if slightly scary learning moment for everyone about how these things are built.
Definitely. The nuances matter.
Yeah.
By the way, if you want to dig deeper into any of these topics we're covering, you can find more info and links over at niftynoon.com.
Good point. And finally, one last item, Worldcoin. Sam Altman's eye scanning project. It's officially launched in the US now.
It has, yeah. The orbs, those shiny eye scanning devices, and the WLD token are now available in 6 U.S. cities: Atlanta, Austin, L.A., Miami, Nashville, San Francisco.
So US residents can now get their iris scanned for a World ID and some WLD tokens.
Correct. The idea is that World ID acts as a unique proof of personhood online. But, this project has faced a lot of privacy concerns globally.
Yeah, I remember hearing about regulatory issues, temporary bans in places like Spain, Portugal.
Absolutely. Concerns about collecting and storing biometric data are significant. But despite that, they're pushing ahead, claiming 12 million verified users worldwide, integrating with platforms.
And they have a new, smaller orb now, too, the Orb Mini.
Yeah, a more portable scanner. And they're adding DeFi features, prediction markets, into the World app. So their ambitions seem pretty broad, way beyond just identity verification.
It's certainly ambitious and definitely raises some big ethical questions.
No doubt about it.
Okay, wow. So we've covered a lot. As you said, the landscape is just buzzing with activity, isn't it?
Incredibly dynamic, from big Bitcoin plays like 21 Capital to these really out there experiments like contentcoins, and then major projects like Worldcoin hitting the US. Yeah, a lot to digest.
We really hope this deep dive gave you a clearer picture of these key events, maybe sparked some ideas for your own research.
Definitely. Think about 21 Capital. Their whole mission, focusing on Bitcoin accumulation, those Bitcoin-centric metrics. What if more public companies start thinking like that? What are the long-term ripples?
Yeah, or Boop.fun on Solana, that reward system for meme coins. It's trying to build something more sustainable, right? Could those kinds of incentives work elsewhere? Beyond just meme coins, how might they evolve?
And the Bitcoin ETFs. Huge inflows show institutional interest is strong, no question. But analysts are still cautious. So what else besides ETF flows really matters for Bitcoin's price going forward? What other factors should you be watching?
Good question. Then there's content coins. Controversial, maybe, but a really novel attempt at direct content monetization. What are the real upsides and downsides for creators and users as that whole experiment plays out?
And Pokémon. Those subtle hints about Web3. It shows how even huge traditional companies are looking at blockchain, even if cautiously. What other big IPs might dip their toes in? And what would that look like? Could be subtle, could be bigger.
Right. And Ethereum's upgrades like EOF and the Fusaka hard fork, it highlights that constant tension in big networks. pushing innovation versus managing complexity and risk. How do you weigh those things when it's critical infrastructure?
Bitcoin is digital gold. That narrative seems stronger lately with institutional buying and market moves. Is that trend sustainable? What could reinforce it? Or, maybe more importantly, what could challenge that perception down the road?
And that Clone X incident. Such a practical reminder about NFT storage. What's the right balance between convenience, cost, and true on-chain security for digital assets? And finally, Worldcoin's US launch brings privacy and biometric data in Web3 right to the forefront. What are the crucial ethical lines we need to consider as that tech advances?
Lots to chew on there.
Definitely.
Yeah.
These are just some threads to pull on, really. We seriously encourage you to dig deeper into anything that caught your attention today. And like we mentioned, you can find more info and links for everything we discussed over at niftynoon.com.
Yeah, please do check it out. There's always more to explore. Thank you for listening to the Nifty Noon podcast.